WPTV. And as always, make sure to like and subscribe to us and follow us on all of our social media platforms. We'd love to have more of you following us. So my guest this week is, of course, James West, the one, the only. And James, welcome to WPTV.
Well, thank you very much, Jeff. It's my pleasure to be here.
And, I have to ask you, because, we all sit there, you and I and all of us here sit there. We sit at our tables and in our trading offices and watch our charts. And of course, two things that have caught my eye, of course, is gold, which has pulled back some in the last couple of months. But I kind of like the look of it here. And then we have Bitcoin, which just seems to continue to explode higher. So let's kind of talk through and get your feelings on where you see both of these. Let's just start with gold and where you think, because you know this market better than any of us, in my opinion.
Thank you very much for that, Jeff. I have been obsessed with the dynamics in alternative monetary assets, of which I consider gold and silver members, but I do not consider Bitcoin or cryptocurrencies members. And so I'm faced with this reality that despite my student status of the monetary metals and monetary policy for my entire professional career, I find myself in the wrong, as demonstrated by the prices and the profits made by investors in both of these sort of asset segments. And so today, in fact, I find myself in a position where the price of gold has lost somewhere in the neighborhood of 12% in the last week. Bitcoin suffered a similar loss. However, at the beginning of this week, Bitcoin has recovered substantially all of its lost 12%, whereas gold is still wallowing in the muck of an ignoble 12% price decrease for no apparent reason. And so I often find myself explaining or being asked to explain my rationale for the continued mindset that I have, which is essentially this, that gold has been a standard against which all other value in the world has been compared throughout written history. And that's because gold is a fundamental metal that has an incredible difficulty in its acquisition, in its extraction from the earth, in its refinement into its state of where it is actually a monetary representative, which is nothing more or less than 5 nines pure in the modern context, whereas Bitcoin has zero difficulty in its fabrication, except if you consider the fact that somebody has arbitrarily configured a series of difficult algorithmic problems that are nonetheless easily solved by a computer should you have sufficient computing power. So whereas all of the effort put into the extraction, acquisition, refinement, storage, and protection of a physical representation of gold is substantial and is tangible, we find ourselves with Bitcoin, whose extraction, refinement, fabrication, transportation, protection, in all cases, is a matter of virtuality. In other words, it does not actually exist. It merely exists as the result of an agreement by humans and humans alone that this snippet of code, as a result of consuming this amount of energy, constitutes a value that is relative to all of the real value in the world. And
so James, sorry to interrupt, but let me just make sure I understand sort of where you're coming at from with all this, because we all know how you view gold. So with Bitcoin, are you more skeptical about the price levels that you've seen because it's done better on a, let's say, relative strength basis compared to gold over the past couple of months and certainly over the last handful of weeks? Is that your concern here?
Well, the price of Bitcoin is the result exclusively of speculation. It's not the result of diminished supply. In fact, throughout the entire life of Bitcoin, which we're now approaching 10 years, the supply of Bitcoin has doubled, no less than 4 times. Each time there is what is deemed a fork in Bitcoin, where one Bitcoin contingent disagrees with how the Bitcoin should, from that point forward, be administered. They create a copy of the entire Bitcoin inventory and issue a new set of coins, in general, pari passu, or one for one, to the new Bitcoin believers for the new flavor of Bitcoin. So we have now 4 flavors of Bitcoin as a result of 4 forks. So the fundamental representation of cryptocurrency advocates in terms of Bitcoin, that it is not subject to the debasement that US, or rather government administered fiat currencies are, is patently false. And so we are in this reality where the price of Bitcoin has roared up to $20,000. And I will point out that the evidence suggests that that is the result of a manipulation among certain participants in Bitcoin and some of the other alternative cryptocurrencies that nonetheless escapes the mainstream news reporting for the most part because of the complexities involved in understanding the basis of Bitcoin and all of its various components. People just look at Bitcoin and say, a programmer says, I understand it, I appreciate its value because it is so difficult and it's such an elegant conglomeration of programming relative to the idea, and therefore I buy into it. Of course, a programmer is going to say that because he can now program his own money.
So it goes without saying, I guess, that if I said, what's your opinion on Bitcoin, you would say you would not be buying it here or probably at any point in the recent past.
Well, I'm going to get to that, Jeff.
Okay.
I would say that any effort to ascribe value to something as virtual as Bitcoin or any other 3,000 cryptocurrencies or roughly 1,000 new cryptocurrencies appearing each year is a matter of either fraudulent behavior on the part of the promulgators or promoters, or stupidity and complacency on the part of the buyer. That being said, I'm in the business of speculating and profiting. So if somebody was to say to me, call me up and say, James, I appreciate your thoughts and your opinion that Bitcoin and all cryptocurrencies are various levels of fraud, which is my heartfelt conviction, I have information for you. Bitcoin is going to be $40,000 in 2 weeks. And if you don't make a purchase, you're going to miss out on that. Well, if I put any stock into some such phone call, I'm going to buy Bitcoin. In fact, I've got an account. What can I say?
Sure.
I'm going to start buying it. The bottom line is here, Jeff, is that despite my convictions, which are governed by my conscience and my moral sort of fiber, I'm not going to miss out on an opportunity to make my life a little easier and improve my wealth. So that being, so here's the conundrum. This is the essence of a sophist, is somebody who will argue in favor of one thing based on their beliefs, but can adopt the opposing argument through sheer practicality. And that's where I find myself at with Bitcoin.
Spoken like a true trader, which we all are, and an ace debater, as Sophocles, from his grave would be applauding you greatly, as I am here as well. So let's shift from Bitcoin. Let's talk about gold. As far as where you see gold going next, and based on that, would you be a buyer or somebody who would want to initiate new purchases of, the senior gold stocks or junior gold stocks, that kind of thing?
Sure. Well, again, in the same context of my overarching government of by the trader mentality that I find myself defined by, I wouldn't touch gold with a 10-foot pole today. And I say that sort of tongue in cheek because the bottom line is I do have holdings in gold miners. And that's because there's always the opportunity for an exponential explosion in the price you pay for a gold mining stock relative to the price you're going to sell it at and it's not necessarily correlated to a rise in the price of gold. For example, gold at, well, let's say $1,800 an ounce. Most of the gold in production today is being mined at within a range of cost from $800 to $1,100 per ounce. So the bottom line is gold miners are profitable at these prices still. So I'm not interested in buying gold on a speculative price of gold increase per se. If that were the case, I would indeed just go out and buy gold bullion ounces. And I have done that in the past. But when it comes to gold miners, and more especially junior gold explorers, well, you're paying a very low price to acquire a piece of a project, in the case of an explorer, that may or may not have a viable gold mine on it. And viable meaning it's got sufficient gold and sufficient concentration that it can be mined at a future price that will not exceed $900 to $1,100 an ounce and put it out of favor relative to the other gold miners. So I am invested in those smaller gold speculative stocks because regardless of what the price of gold does, if you're paying a nominal sort of perceptive price of 10 cents per ounce in the ground, and they do find a viable gold deposit, and it costs them $900 to get it out of the ground, then your holding in that company's assets, the equity of it, is going to go up just because they can sell that ounce for $1,800 or $1,700 or $1,600, which is still wildly profitable relative to a lot of businesses.
Sure.
So I wouldn't touch gold bullion on the proposition that the price of gold bullion is going to go up and give me a return on my assets, but I would certainly buy junior gold miners at entry-level pricing based on my ability to be convinced that the management team is right about their theory that there is a viable gold mine in the project they would propose to use my investment to explore and develop.
I think those are great insights. I find it encouraging that on a lot of the individual charts that I'll look at for, good, legitimate junior gold mining companies, that in many cases they haven't even like come close to breaking out. Like they're hitting new near-term highs, but they haven't yet even equaled their highs from, like 2012, 2013, 2014, when these were last like really super hot, which to me bodes well for the future. So let me kind of, in talking more about junior golds, because I think there's a great opportunity there myself. How do you feel about regarding, like, again, we're talking about the price of gold at, let's say, 1,800 an ounce, and these smaller companies, as well as the seniors, having if they can keep their production costs low, there's a lot of cash flow there. I find it encouraging how well most of these companies seem to have brought their costs down in a huge way compared to, say, 4 or 5 years ago, where it seemed like a lot of them were, I guess they just had gotten a little bit fat, let's say, in terms of costs. So, how long can they keep this sort of discipline together so that we can continue to see this rally in these equity type investments in gold continue to move higher? Or do you see at some point, which we've seen in past cycles, where one junior gold mining company A buys junior gold mining company B, and it becomes sort of a game of trying to see how much do they pay to acquire that gold that is still in the ground, and the development costs and all that kind of stuff?
Yeah, well, that's a many-faceted question, but a great one that needs to be considered by investors. First of all, you got to look at the entire history of the junior gold exploration market, and just for the sake of our viewers, I'm going to define what is a junior gold explorer. Well, a junior gold explorer is a company that hasn't been around for very long and is raising money at a very low price to explore an idea that they've identified and acquired the rights to, a piece of ground where there may or may not be a gold deposit that is going to be viable and be able to be profitably mined. In the history of gold mining and junior gold companies more particularly, 99% of the companies that set out as junior miners and raise money from investors to try to find a gold mine fail and do not find any gold, or find some gold, but not nearly enough to constitute a deposit. And so they end up vaporizing the investor's dollars, leaving the investor with a terrible experience and a terrible taste in their mouth as it pertains to junior gold companies. Combine that with the historical prevalence of what we will call an abusive approach to the treasury by less scrupulous would-be mining companies, where the G&A consumes upwards of 60% of all funds raised by the company. So mining investors have been burned repeatedly for the last 20 years, especially, where on the backs of an increasing gold price, that's what it gets investors' attention, and they all come flocking to gold. Everybody puts money into whatever gold deal they find themselves exposed to. 99% of them are going to fail, but the greater problem has been that, looking back, investors find that management has been living rather richly off of the funds raised from investors. In fact, G&A historically in the junior mining sector tends to average above 60% of all funds raised. So in other words, only 40% of funds raised goes into the ground. The rest is spent by management in salaries, promotion, travel, accommodation. And so these are among the problems why you haven't seen the gold juniors take off despite a generally rising gold price environment. Is there has been such a sour taste left in gold investors' mouths that a lot of them have sworn off gold, and junior golds especially, forever. And so that leaves a much smaller audience for gold juniors and tends to increase the cost of capital to junior gold companies. In other words, whereas you used to have to give up maybe 25% of your company for your first round of investment to your first round of investors, now companies are finding themselves having to give up almost 50% or more of their company for that earlier investment. And so right away, the risk versus reward proposition for management has been damaged by the abuses of past management teams who have been less than sincere in their intention to locate gold. And so that's the reason that you haven't seen the companies take off yet.
But James, and let me just step in and I'll ask you an additional question here. When I hear all that, and I agree completely with you on that, what you've been painting here. In some ways, that may well leave open a much bigger move for these junior golds. Let's suppose we move into some sort of environment where we have, I don't know, more inflation or a weaker dollar, more of both, where this is an asset class that has generally been, as you've been pointing out, ignored because of prior pain by many investors. And as is typical with pretty much any stock in any market, people tend to ignore it, and then it moves higher and it moves higher. Weeks, months, years go by, and then suddenly it dawns on the larger mass of investors, I got to get in on this baby. And of course, they're usually the last ones left holding the bag for the last parabolic move, as where somebody like you would be in on this stuff, and as you have been many times, much earlier in the game for the larger share of profits. Do you see a scenario where we can perhaps see some sort of larger parabolic move somewhere down the line? And what would that scenario be if you could paint out your ideal, paint by number James West picture of the great environment to make gold stocks, especially these junior golds, come to the head of the speculation list for investors?
Sure. Well, if you look at the last two major bull market in junior golds, they have both occurred when there is no other game in town. In fact, I'm going to take the three phases of the gold market that have resulted in the current price levels. So the first time that gold really spiked up on speculation was in 1980. And that was a full 7 years after President Nixon closed the mandatory gold government gold stipulated price of $35 an ounce as part of the Bretton Woods Agreement. That was essentially the way that governments in the developed world agreed to administer their own monetary pools relative to how much gold they had. And so when that ended and the price of gold was locked in at $35 an ounce, all interest in speculating in gold was destroyed, because why would you invest in something that had a guaranteed sale price of $35 and the cost of mining it was going up and the cost of exploration was going up? So when that Bretton Woods Agreement ended, which ran from 1942, I believe it was, to 73, suddenly gold was free to sort of be exposed to the supply and demand metrics and the speculative fuel of investors. And so in 1980, with interest rates at all-time highs, the price of gold took off to $800 and catalyzed a rush of investment into junior gold miners. And that was the golden age of mining, which lasted until Bre-X. And if there's a lot of people who don't know what Bre-X is, so just quickly, Bre-X was a company that was a Vancouver-based junior gold company that was exploring for gold in the Busang district of Indonesia. And they took some preliminary promising results, and through fraudulent manipulation of the samples at the laboratory, created the impression that there was a gold deposit there of epic proportions. And the price of Bre-X rose to hundreds of dollars per share before the fraud was exposed, and the price collapsed to nothing, and the company was delisted, and it wiped out an entire generation of gold mining investors. And that caused the demise of the gold junior market until the next gold junior market, which happened in 2000 on the back of the failure of the tech boom. And so the tech market crashed and vaporized $5 trillion of investors' money. And so nobody wanted anything to do with tech after 2000. And it was before the real estate boom got ahead of steam up in 2003 and 4. And so the only game in town at that time was junior mining. And so again, a golden age in junior mining ensued, because it just so happened to coincide with the price of gold taking off from 200 to first 300, then 400, then $500 by 2005, 600, $700, and reaching to its all-time high previously, before this year, of $1,920 on September, I believe it was 11th or 4th, 2011. It was September 4th, 2011, intraday high of $1,920, before getting kneecapped by the forces of the futures market back down to 1,100, causing the collapse of that junior gold market.
Right.
And so the point I'm trying to make here is that the junior gold market always manifests around the ashes of a disaster. And so in the gold bull market for junior golds in 2000 was born from the collapse of the bull market in technology. The gold bull market of 2009 and 10 was catalyzed by the collapse in the housing market, which fueled a general market collapse, which catalyzed a spike in the price of gold, which in turn catalyzed a boom in junior gold markets. When gold price collapsed back to 1,100, that took the price of all these junior golds down. And so another generation of gold investors were wiped out and swore never again junior gold. And so here we are at 2020, and in 2020, gold touched another all-time high of over $2,000. But this time, the expected gold market, the explosion of prices in the junior golds that would normally catalyze an avalanche of investment, did not materialize. And the reason for that is twofold. One, this time gold is competing with Bitcoin. So all of the arguments that people are making, that people historically made for gold, that you can't easily debase gold because we're producing 2,500 tons per year. Its difficulty is increasing. People tend to hold on to gold. It never disappears once it's above board. It is notoriously difficult to move, store, and protect. And so the cost of moving, storing, and protecting it is insane. And Bitcoin professes to offer all of those advantages while not having the difficulties and expense of protecting and processing and storing and moving. Bitcoin can be moved virtually because it exists virtually. And so that's one of the reasons that you haven't seen the explosion in junior golds. The second reason is the price of gold took off to 2000 and came right back. Here we are 6 months down the road from its price explosion to $2,000 an ounce, and we're back here at 1700 and change. And so in this era, in this decade of extremely volatile markets, where the NASDAQ 100 has increased, in a year where the NASDAQ 100 has increased by 30% in value overall, in a range of volatility above 50%, that the sensitivity to volatility drives people away faster than ever. And so it's a different world we're in now. And the whole value proposition of saying to an investor, well, look, I want you to give me some money, and we're going to explore this property for 3 years. And then if we find a viable gold project, I'm going to come back to you and I'm going to need $1 billion to put this gold project into production. And so in 7 years, we'll be making good money. In the age of the instant tech billionaire, that's laughable. In the age of the Bitcoin bazillionaire, where a guy can sit there and program his own money, that's ridiculous. And so this is the problem we're faced with in the junior gold market, is that the potential audience for junior gold investors, who would normally be a percentage of the youth coming up through the education and experience of the monetary system, well, they're now going to cryptocurrencies and Bitcoin. They want no part of gold. Gold is ridiculous. Gold was their father's asset class, alternative monetary asset. And so this is the fundamental problem with gold at this point, and which is actually the biggest catalyst for future price appreciation in gold itself, is the fact that nobody wants to risk any money to explore for gold at all, except a small group of people in the mining industry in Canada and a small and diminishing coterie of old school gold bugs around the world.
So James, when I hear all this, I have sort of a split opinion, because partly the contrarian in me thinks, well, every asset, especially when it has a great deal of potential value there, like we see with gold miners. You got gold at 1,800 an ounce, and if the cost to pull it out of the ground is 1,000 or 1,200, it seems like a workable proposition. It's a matter of them getting discovered. And then the idea of the gold versus Bitcoin, I can see why nobody likes gold, and Bitcoin is the investment of the hour and of the decade, certainly. But if there's anything and I know, and that we all discover eventually as investors and as speculators, is that at some point, that way out of favor asset or stock or sector that nobody wanted, if there's actual real value there, it will get discovered. And we don't know what will drive people towards it, but that it will occur. So I guess I'm just looking for sort of the big picture idea here, that do you think, given everything you've painted here, that gold, and let's say junior golds and the senior gold shares are a place that people need to focus on, if perhaps more so now than ever, because we have such high risks elsewhere that that haven't really manifested yet. The broader U.S. equity market continues to work its way higher. We don't know how much longer that will last. We could be talking about this 5 or 10 years from now. We could be talking about a major change a month from now. Nobody really knows. But overall, looking forward here, you sound bullish in a very contrarian way on junior gold.
Yeah, well, so here's the thing, Jeff. Because the difficulty in developing and finding and developing a gold mine has gone up by virtue of the fact that the audience for participating in financing such projects has gone down by so much, and the fact that Bitcoin and tech stocks as sectors are commanding so much of the global investor attention, that the price compression in a valuable gold discovery is exponentially greater than what it was back in 2011 or 2006 or 2000 or 1986. So this is why I remain a gold bull. Thanks to spending 30 years in the gold market, looking at gold companies, understanding the dynamics of supply and demand, understanding the dynamics of market psychology, and understanding at this point that the US government and global central banks are willing to flood the market with an endless supply of fiat currency,
Yes.
which is only bullish for the price of gold in the most fundamental way. If you take a pile of oranges and a pile of apples, and there's 10 apples and 10 oranges, and you say, these are each worth $1. And then let's say 9 of the oranges are destroyed and you still have 10 apples. Well, that orange is now worth 10 times what it was because the supply level has gone down. And if the demand for oranges is equal to apples, it has gone up. So just on a strictly nominal basis, the price of gold is increasing. The value of gold has already increased dramatically. The price is incapable of reflecting the value of gold in the current market because there are so many distortions created by central bank fabrication of fiat currency. And that is the biggest opportunity in junior golds, senior golds, gold ETFs, gold funds, gold doubloons in the history of gold, in my opinion.
Well, I couldn't agree more. And I think it's a great thing as we wrap this up, a great thing for everybody to keep in mind, because if there's anything we've seen over the years, whether we're talking individual stocks or sectors, they can languish for a long time and then suddenly get rediscovered seemingly overnight and rocket higher. We've seen that with, value stocks in recent, the last couple of months. And, we've seen that with other asset classes over the years as well. And I think it's a great thing to keep in mind regarding gold. It can happen, the turn can happen a lot faster than people otherwise might imagine. So I think it's fantastic to bring this out and keep people focused on us. James, any last, brief thoughts here as we kind of wrap things up?
Well, Jeff, all I can say is that I can't see the price of technology stocks going up forever because they're already at astronomical values relative to where they were 5 years ago. So I think that this coming gold wave is growing closer. The higher tech stocks go, the faster they rise, and the more steeply they rise, the closer we are to this sudden inversion in investor interest as a result of a skyrocketing gold price, as the tech market must reprice itself lower to approach reality.
Absolutely. Follow where the value is. And there's a lot of value there in gold shares in general. So James, thank you very, very much. I think this gives us a lot of insight and where we need to look, not so much for tomorrow, but for next week and next month and coming quarters. So thank you very much for coming on to WPTV.
You bet, Jeff. Thank you very much. We'll see you soon.
And for all of you watching at home, thank you for joining us. And we'll see you again next week for another edition of WPTV.